Good morning, students. Welcome back to this discussion on amalgamation. So in the previous session, we started with this accounting requirement of amalgamation. So today we plan to continue on that. Okay. So now, quickly, before we move on to the illustration, so we started with one illustration in the previous session. Let's do a recap of whatever we understood. Yeah, and I would suggest if you can just keep sharing the points that we understand about amalgamation. Now, amalgamation we discussed could be of two types, one in the nature of merger and other one in the nature of purchase. Now, in relation to the amalgamation in the nature of merger, there are certain accounting requirements which are required to be considered. So I'm not talking about the conditions right now, the accounting requirements which are required to be considered. Okay, so one which is in respect of assets and liabilities. So assets and liabilities will move on at the book values, correct? Yeah. Now, in relation to the reserves, can you just quickly tell me what is the requirement in relation to the reserves of the transfer company when it comes to the amalgamation in the nature of merger? Over to you quickly. Okay, so Larry has a query. So she's asking, I missed the second half of the previous class. Can I understand? Yes, sure. I don't think there will be any concern. Yeah, if you have clarity around the computation of purchase consideration, which anyways we have discussed quite a lot, you should be able to understand this. Okay, not a concern. Okay, great. So Abhishek and Hardik are saying that those reserves will maintain the identity. Very good. Now moving on to the amalgamation in the nature of purchase. Now in respect of purchase, we discussed that assets and liabilities may be carried on either at the book values or they may require some sort of revaluation. Yeah, so both the possibilities are given. But in respect of reserves, when it comes to amalgamation in the nature of purchase, what is the requirement? Over to you quickly. What is the requirement? What do you get to see? Yes, when it comes to amalgamation in the nature of purchase, what is the requirement in respect of reserves? I'm talking about reserves only. Yeah, quickly tell me. Great. So Hardik says their identity will be lost. Why? Because they will get mixed up. But when it comes to any statutory reserve, Janki says that those statutory reserves will maintain their identity. Okay. Now, tell me one thing, that if you say that only the statutory reserves will be carried or they will be preserved, so how will you deal with that? Do we have any specific accounting requirement for the same? Over to you quickly. So Preeti is saying that reserve their identity, correct? But how do you do that? So what will you do to ensure that they are maintained? Great. So Tambeshwari says that corresponding to such reserves, amalgamation adjustment reserve will have to be created. So it's a debit balance which will have to be created. Okay. Yeah. Good. Now, there was one more point in relation to amalgamation in the nature of purchase. So we discussed if in case the purchase consideration is in excess of the net assets acquired. So you'll get an asset to be recognized in the books of transferee company, and that is what you call as goodwill. But if in case instead of excess that payment is short, then you will get capital reserve. Yeah. Then instead of goodwill, you'll get capital reserves. Okay. Now, please remember that when we'll be discussing all of these accounting requirements, so there are two sets of books. One will be that of the vendor, or you can say the transfer company. The other one will be that of the transferee company. Now, depending on the requirement of the question, we'll have to just check. So every time when there's an amalgamation, so it's not that we'll have to do each and everything in relation to all the parties which are involved. So the question will specify whether the accounting requirement is whether the accounting is required for the transfer or the transferee. And if at all accounting is required So do we need to get onto the ledgers? Do we need to get onto the journal entries, or do we need to get onto the financial statements? Okay, so all of these requirements will flow from the question. So accordingly, we'll have to approach. Okay. Now, Hardik has one more point. So he's saying that if in case it's a merger, then such differences get mixed up with general reserve. Yes, of course. Good. Very good. So now in the previous session, we picked up one question. Okay, so what we'll do is we'll just move back to that question. And I would also suggest you can just open your study material. Okay, so we'll get on to the journal entries today, wherein we'll try to understand as to how the accounting is done in the books of both the parties, transfer as well as the transferee companies. Okay, so we are given this balance sheet of Z Limited, which is acquired by Y Limited. So please remember it's Z Limited, and the company which is acquiring is Y Limited. So therefore, transferee is what? Y Limited. Okay, so this balance sheet and then some additional information was also made available to us, which was all in respect of the settlement as to how this is getting settled. Okay, some of these points we looked at. And on the basis of this information, we were required to get on to the accounting requirements. Okay, means we were required to close the books of the vendor company. So can you tell me which company is the vendor company in this example? Which company is the vendor company? Yes, quickly. Z Limited. Great. And some of you who are new to today's session, I would suggest you can just quickly go through this question. Okay. Yeah. So purchase consideration we had already computed, but let's quickly flip through the purchase consideration once. So when it comes to the purchase consideration, we discussed that any amount which is paid to the shareholders, be it preference shares or equity shareholders, that is the amount that will form part of purchase consideration. Okay. So in this example, there were two modes of the settlement. One was cash, second was shares to both the parties, means both to the preference shareholders, to the equity shareholders. So that's why the total amount of purchase consideration that was derived was 17,20,000. Okay. Yeah. So this is what we computed in the previous session. Now as we understand the concept that transfer company will not exist anymore, means this will come to an end. This will come to an end at the time of amalgamation. So that's why what is required to be done? We'll have to consider that because this company is coming to an end, so that's why its books of accounts will be closed. And by closure, we are not saying that we'll prepare its financial statements or we'll close the reporting year. No. So it's like we will close this company forever. Its books of accounts will be closed forever. Okay. And how do you do that? Now, for closing this books of accounts or closing this company forever, we will require preparation of realization account. Okay. And what is the role of this realization account? So this happens to be a parking account. Now, parking account means wherein this company will transfer all of its assets and liabilities to begin with, and eventually all of those assets and liabilities will then keep getting transferred to the various parties. Okay. So as per the settlement mechanism which would have been agreed between them. Okay. That is what we are going to discuss now. Fine. So now what you should do is, see, when we are solving this question, so I would suggest you should also try to solve this instead of just looking at this. Okay. Or at least try to prepare the realization account. Okay. When we are solving this alongside. So it will be great if you can just solve this on your own, if you have already covered this, but if no, then please make sure that you prepare the realization account alongside, because we'll be looking at the journal entries first. Okay. So now at the first place, all the assets all the liabilities of the transfer company of Z Limited now are getting transferred to the realization account. Okay, so let's look at the transfer. Now, because all the assets will get transferred, okay, so what do? You will credit those assets because that's how you will remove them. Okay, now, which all assets do we have in the books of the Z Limited? So we have got inventory. Yeah, so we can just pick them one by one. Inventory is there. Yeah, you should look at the financial statements. Huh? Trade receivable is there. That has also been moved. Then we have cash and cash equivalent, right? Then we have cash and cash equivalent. Now, please remember that whenever this closure of books is done, so cash and cash equivalent will not get transferred. Huh? Okay. Why? Because if cash is not taken over by the purchasing company, it should not be transferred. So we'll transfer all the assets except cash. But if the question specifies that the purchasing company is also the transferring company, only then it should be moved to the realization account. Otherwise, what will happen is this cash again will not stay. This will also be closed, but we'll understand there will be a separate cash account, cash ledger which will have to be prepared, and on that basis it will get transferred. Okay. So therefore, cash of rupees 70,000. What you should do is you should look at the ledger of cash. Okay. So I would suggest you can just look at the ledger of cash. Okay. So now, if you go to the working note, now along with this, what is required? You will have to go to the working note for this. Now, in the working note, you'll see now this cash account has been opened. So two accounts will run parallelly. One realization account, second cash account. Okay. Now, in respect of realization account, we are transferring all of these assets, liabilities, one by one. So the journal entries we pass will also move those to realization account. This is just one and the same thing. Okay. But cash account will also keep looking at it simultaneously. Okay. Yeah. To save time in the exam, that's how you should approach. But currently, just to get an understanding, first of all, we are not moving to the realization account every now and then. We'll look at the accounting entries. Okay. Then later on, we'll come back to the realization account. Okay. Now, further, if you look at the balance sheet, there are certain items of PPE. So land and building is there. Correct. So land and building is there. So we'll transfer. Then you have plant and machinery that will also get transferred. Then intangible assets are there. 50,000 is for patent. 2,40,000 is for goodwill. Okay. Now, the way these assets have been plotted in this accounting entry was not in the order of the was as they are given in the financial statement. So there is no order as such. Okay. Fine. Now, here again, though we discussed this in the previous session, now this goodwill, please understand about this goodwill. See, this goodwill is not the one which we discussed or which gets generated at the time of amalgamation. Yes or no? This goodwill is the one which is already existing. This goodwill is the one which is already existing. Okay. So now, in respect of this goodwill, please don't get confused that how come it's an amalgamation in the nature of merger, because in the nature of merger, you don't get goodwill, you take it to general reserve. So because it's the existing goodwill, so that's why you will treat it like any other asset. Okay. All right. So now we have transferred all the assets to the realization account. Fine. Okay. Now, what is going to be the next step? Similar to this, we will transfer all the liabilities. Okay. Now, if you look at the liabilities, one, we have trade payable. Okay. Then we have long-term borrowings, which is all about debentures, correct? Then the question says, if you look at the requirement of the question, yeah, question says Y Limited has taken over all the assets except cash and all the liabilities except for interest due on debentures. So what does it mean? That there is one other current liability. If you look at the balance sheet, other current liability, because that's not been taken over, so that's why you will not include it. Okay, some of you may be thinking that why are we ignoring that? Because the purchasing company has not taken it over. That's why we'll not include it. Okay, it's been specified in the question, right? Now, over here, reserves are not required to be considered. That is what we looked at, and that is what we discussed, correct? Even though we understand it's an amalgamation in the nature of merger where all the reserves will maintain their identity, but still, as of now, they will not be moving to the realization account. Okay, now there's one reserve in the reserve and surplus schedule, if you look at, which is called as workman compensation reserve. Yes or no? Yeah. So if you look at that reserve, that is workman compensation reserve. So let's go back to the balance sheet. Okay. So we are talking about this one. This is for 8,000. Now, even though it's a reserve, but the information says that out of this reserve, 5,000 is expected to be a liability, means 5,000 is payable, which is not in the nature of reserve actually. So you can say this reserve has got two components. One, which is in the nature of a liability, and other one, which is pure reserve. Okay. Now, because all the liabilities are taken over, so that's why a component of this, yeah, that's why a component of this is required to be taken over. Correct? So that's why what will you do? You will also consider this while preparing the realization account. Okay, so out of this reserve of 8,000, therefore 5,000 will be taken over. 3,000 will remain. Fine. So what we will do is we'll move 5,000 to the workman compensation reserve. That's a liability. Okay, so that has already been, that's also been taken. Okay, now what we have done is we have moved all the assets as well as the liabilities. Okay, now once the assets and liabilities have been moved to the realization account, so what is going to be the next step? We'll start settling this. Okay, now Z Limited understands that all of its assets and liabilities will get transferred to Y, for which it will receive purchase consideration from Y. So we are looking at it from the perspective of Z. Okay, that's why it will create a receivable. Why? Because money is required to be received, or you can say something is required to be received, whether it's cash or preference share. Okay, so therefore, what will it do? It will debit Y Limited. Means it will create a receivable in the form of Y Limited. And what is the amount for this? Purchase consideration. So 17,20,000 is what? That's the purchase consideration. Okay. Okay. So in between, Hardik has a question. So he's asking, sir, in case of merger, we take all the reserves and the liabilities and assets. Then, sir, in this case, how it will be in the nature of merger as all the assets and liabilities are not taken? See, the exceptions could always be there. As around reserves, we'll deal with all of those reserves. Don't worry about it. But if the question specifies that it's an amalgamation in the nature of merger, first of all, to begin with, and further it says that those assets and liabilities are not required to be taken over, then you should go ahead with the requirement of the question. Okay, don't get confused. Fine. And anyway, some of these exceptions are quite okay. Huh? Yeah. Larry is asking this 3,000 workman compensation reserve, is it an interest? We don't know. And do we need to know? There again, no. So you just simply consider that it's in the nature of any reserve. How do we deal with that? We'll come to that. Okay. Tambeshwari is asking, sir, why capital share? Why not take capital share? I couldn't understand. What do you mean by capital share? Okay, so moving further. So now Z Limited has created a receivable in respect of the purchase consideration. Okay, now as a next step, what will happen? Now this receivable will be credited. Okay, so this Y Limited receivable which was recognized, this will be credited, and against this, whatever Z Limited had to receive, so that will be debited. Okay, so three things are required to be received. So if you look at the purchase consideration, three things are required to be received. What is the first one? Cash. Then we talked about preference shares in Y Limited. Please understand, Z Limited will receive preference shares in Y Limited. Okay, so that will be debited now. Equity shares in Y Limited. So that will also be debited now. Thereby, what will happen? This receivable of Y Limited will get settled. Okay. Now this Y Limited is settled. Now, if you are still confused as to where does this cash preference share from, so for this, you can just go back and refer this purchase consideration. Remember this? Yeah. So preference shares were 4 lakh. Equity shares were 11 lakh 20,000. Okay. And remaining was the cash. Yeah. So now this is the purchase consideration which Y has to pay to Z. Okay. Now this amount, because this has to come from Y, so that's why what has happened? Y has been credited, and corresponding to this, the assets. So for Z, what are these? They are assets, whether it is cash or something else, they are all assets. Now all of those assets are therefore credited. Okay, understood? All of those assets are therefore credited. Clear? Any questions so far? Any doubts so far? Quickly. Okay, so Hardik has a question. Hardik is asking, but sir, how do we identify? Just a minute. How do we identify it's a merger? See, every time this information is something which will be available in the question. Okay, or at least the fact pattern will be covered over there. So you don't have to worry about it. Yeah. See, currently, if you look at the question, it's been specified over there. Yes or no? And we'll also look at some more question while you will also go through some more questions. Every time you will get to know about it. So don't get confused about this. Okay. So Neha is asking, sir, where does this cash of 2 lakh come from? Okay. So that is what I exactly mentioned. Neha, if you go back to the purchase consideration, you remember purchase consideration we computed as 17 lakh 20,000. In this purchase consideration, there was cash 40,000 and 1 lakh 60,000. So this is where it comes from. Okay, so you'll have to just keep referring your working notes every time. Fine. Yeah. Neha, clear on this? Any more questions? Yeah. Okay, great. Preeti is asking, sir, in this fourth point, okay, in point of view of Y limited is considered or Z limited. See, please remember that we are currently recording this in the books of Z limited. Yes or no? We are recording this in the books of Z limited. So, from whose point of view you will consider this? Tell me. So, if you are preparing the books of Z limited, whose point of view you will consider? You tell me. Preeti, quickly answer this. Whose point of view you should consider? Why Y limited? When you are preparing the books of Z, why you will consider this from the point of view of Z? Why? You'll have to consider this from the perspective of Z. So we'll say Z has to receive this, or Z would have received this. Yeah. Y is required to pay this, whether it's cash or any other asset. Now, preference shares, equity shares for Z, what are these items? They are all assets. Yes or no? For Z, these are all assets. So Z will receive these assets. From where? Y. Understood? Great. All right. So let's move further. Now, if you look at Z, Z has received all the assets. Yeah, which were required to be received from Y in respect of assets and liabilities which are required to be transferred. Okay. Now, if you remember in the question, there was one more information. Yeah. So let's try to understand that. The question said, because Z is getting liquidated. Liquidated means because Z is now coming to an end. It is closing its books of accounts. Its business is getting transferred because this company is getting closed. So that's why it's a liquidation exercise which is going. Liquidation means company is coming to an end. Now, if the liquidation will be going on, some expenses will be incurred. Yes or no? Now, for this liquidation exercise, total expenses will be 12,500. So can you tell me who will bear this 12,500? So any expenses of liquidation, who will bear this? Who will incur that to begin with? Who will incur that? Quickly, over to you. Z. Very good. So every time there is a liquidation expense, it will be borne by Z. Yeah. But out of this 12,500, we are told that a portion will be reimbursed by Y. What do you mean by reimbursed? Means a portion Y will pay. Yeah, so Y is saying, don't worry, Z, you are incurring 12,500. Fine, I'll pay you 10,000 for this. Okay, that is what you call as reimbursement. Okay, now we'll have to record this transaction also. Correct? Because if the company is coming to an end, each and everything will have to be closed. Fine. Now, if in case expense is borne by Z limited and nothing is reimbursed by Y, then what is the accounting entry will pass? You will take the entire expense to realization account. Why? Because in the realization account, all the assets and liabilities are sitting. So at the end, what will happen? We'll have to see that due to this settlement, if there is any gain or loss. So whatever will be the gain or loss, that will get transferred to the equity shareholders. Okay. Now, because it's an expenditure incurred, so that's why this will also get transferred to the realization account. So our accounting entry should have been 12,500 debit to cash because this amount is paid. So that's why we'll credit cash. But if some portion of this expense is going to be recovered, then what will happen? If you debit this to realization account first, then when you receive this, so you'll have to credit that realization account. See, at the first place, what is the accounting entry you can pass? Realization account debit to cash, 12,500, 12,500. Then later on, what is it you will be required to do? You will have to credit realization account, debit Y limited, and then credit Y limited, debit cash. Why? Because that much cash you will receive from Y limited. Yeah, yeah. So therefore, it is suggested that instead of passing these multiple entries, you should pass a single entry. Simply the amount which is required to be recovered from Y. Okay. For that, you will debit Y. For that, you will debit Y. Instead of taking it to realization account and then crediting the realization account for the same amount. Okay. Let's not do that. Take the amount to the realization account only when it is required to be sort of incurred by Z Limited. Okay. Now 2,500 is required to be incurred by Z Limited. Remaining, even though it's incurred and because it's reimbursed, so that's why you will debit Y Limited. Okay. Yeah. So Y you debit, realization account again you debit, and you will credit cash. Okay. Now, in relation to Y, why did you debit Y? Because you understand Y will pay cash of 10,000. So that's why you will debit cash and credit Y. Okay, so this entry is therefore effectively nullified. So net impact, if you look at for these two entries is what? If you look at the net impact, so the net impact is what? There's an outflow of 2,500. Simply, realization account debit to cash 2,500. Yes or no? Why? Because 12,500 first of all are paid and then are reimbursed. But this accounting entry has to be shown. So you may be thinking that can we just simply show this as complete net? No, that will be inappropriate. That will be inappropriate. Okay? Yeah. So Preeti is saying 10,000 will be paid by Y and remaining will be settled to realization account. Yes. That is how you will do this. Okay? Yeah. Very good. All right. Clear on this? Yeah. Clear on this? Okay. Great. So now moving further. Now, there was a liability in respect of interest on debentures. Remember that? Which Y refused to take over. Y said, I'll not take over this liability. But does it mean that this liability is not required to be paid? The answer is no. Whether Y takes over this liability or not, this liability will have to come to an end. Whether you pay this or you write it back, whatever you do. Okay. Why? Because this belongs to the debenture holders. And the debenture holders will ask for their money. If Y will not settle, Z will have to settle. Z will have to settle. Okay. So therefore, what we will do is we will move this liability to the account of debenture holders. Now here again, please remember. First of all, you will debit this liability. Why? Because you are transferring this to debenture holders. And then you will pay cash to debenture holders against this liability because you want to settle all the accounts. You will not carry any account because company is coming to an end. Okay. Now, some of you may have a question that, sir, why are we transferring this amount to debenture holders and then paying cash to debenture holders? Instead of this, can we not pass an accounting entry saying interest outstanding debit to cash? See, you can do that, but all the steps in such a case will not be considered to be completed. Okay, so that's why it is suggested not to skip any accounting entry or not to take such shortcuts. Fine. So every time there's an instrument. Now, what is the instrument? Debenture, interest, equity share, preference share. They are all required to be, first of all, transferred to their parties. Now, for debentures, it was debenture holder. So that's why it's been transferred to the debenture holder first of all. And then the cash will be paid against the same. Fine. Okay. Now, what are we left with? Can you think about it? So we have sort of settled all the liabilities by transferring them to realization account. And we have also received the corresponding assets from the transferee company, Phi Limited. Now, what are we left with? Can you think about it? Yes, over to you. Very good. So Hardik is saying cash account is still outstanding. So whether it is short or excess, we don't know. Yes or no? So one is cash account, and there are few more accounts which are still outstanding. Can you think about it? Nitin is saying SHF. So what do you mean by SHF? I think shareholder funds, you're saying? Okay. Reserves and surplus. All right. Very good. So Preeti says preference and equity shares. Yes, correct. See, Y is going to take over Z. Y has already taken over all the assets. Everything is done. But what about the shareholders of Z? Have they received anything? So far, they have not received anything. You may be thinking that, sir, there is an accounting entry we looked at. Okay, let me just go back to that accounting entry because this is a point of confusion. Many a times you may have a confusion that, sir, this accounting entry wherein Z received all the assets from Y, can we not say it's a settlement? The answer is no. Please remember, who is the party which is required to be paid? So when Y will acquire this business, where will this business be acquired from? From Z or the shareholders of Z? Tell me. From Z or the shareholders of Z? Tell me quickly. From the shareholders of Z. Correct? Yeah. Therefore, in this fourth accounting entry, the assets which Y has transferred to Z, does it clear the settlement? No. Because Y has given these assets to Z so that as Z can give all of these assets to the shareholders. These assets are not meant for Z Limited. Okay. So Z is only a medium, or you can say there is a liquidator which is sitting in respect of Z Limited, who will take all of these assets from Y and then give all of these assets to shareholders of Z Limited. Okay, so that's how it's going to work. So in this fourth accounting entry, liquidator who was sitting, he has taken all the assets from Y. And now, after taking over all of these assets, which are there in the books of Z, he will have to keep transferring all of these assets to shareholders of Z Limited. Correct? Yeah. Now, let's move further. Now, shareholders of Z Limited, let's start settling them. Let's start settling them. Correct? Now, if you look at the settlement mechanism, it was discussed. Okay, so I'm just going back to the settlement mechanism again. It was discussed that for each preference share in Z Limited, rupees 10 will be paid in cash and 19% preference share of rupees 100 each in Y. Okay, for which we discussed 4 lakh and 40,000 will be paid to them. Currently, if you look at the preference shareholders, what is the amount of preference shareholders? Preference share capital 4 lakh. Okay. So currently the balance of preference shareholders in the books was 4 lakh. But against 4 lakh, what is it that they are going to get? 4 lakh 40,000. Preference shareholders will not get only 4 lakh. They will get 4 lakh 40,000. Correct? Okay. So now in this case, what will you do? Now, in respect of settlement to the preference shareholders, in respect of settlement to the preference shareholders, this preference share capital will have to be debited. Why? Because this capital account will have to be closed. Okay. So what is it that Z Limited will do? Z Limited will debit preference share capital. Now please remember, in accounting entry number 4, preference shares were debited, but those are the preference shares in Y Limited. Okay. So this is not the preference share capital of Z. Please remember there's a difference between these two. In accounting entry number 4, preference shares issued by Y Limited have been debited. Preference shares issued by Y Limited have been debited. And in this accounting entry to begin with, preference share capital which was issued by Z Limited has been debited. Why? So that this capital account can be closed. Okay. Now, by closing this capital account, because the preference shareholders are getting something in excess, so therefore the balance amount, where will you take it? Realization account. You'll have to take it to the realization account. Now for Z Limited, again an account is outstanding, that is of preference shareholders. So let's clear that simultaneously. Let's clear that. Now preference shareholders account will be debited, and what will be the amount that you will pay to them? Z will have to pay cash and the preference shares issued by Y. So whatever Z had received from Y is now given to the preference shareholders. Understood? Understood? Everyone clear on this? Yeah? Preeti is asking, sir, can we say that for 6% preference shares in Y Limited, 6% preference shares in Y Limited is given, 9% of Z Limited? No, I think you look at the question, please. So it says 9% preference shares in Y Limited are given. 9% preference shares, so the coupon rate is 9%, against 6% preference shares of Z Limited. Okay, so it's other way around. And it's given in the question. It's given in the question. Fine. It's given in the question itself. Okay. Clear? Yeah, pretty clear on this? Okay. So with this, what did we do? We closed the account of preference shareholders. So preference share capital is now settled. So what is the last thing you'll do? Now, principally, if you remember, every time a company is closed, which is the last party who will get settled? Which is the last party who will get settled? Tell me quickly. Equity shareholders. Larry says equity shareholders. I think same is the response from Aisha, Dilip. Very good. So now, as a next step, we should move on to those shareholders also. Yeah, because they have been waiting up. So everybody is getting something. Everybody is getting something except for equity shareholders who have not got anything. So now at the end, whatever will be left out will get transferred to them. Okay. But in this case, we will not be able to pass the accounting entry. Why? Because it's the final settlement. For doing this, we will have to close the realization account as well as the cash ledger. Okay, so every time when you move on to this accounting entry, you will have to understand that you will not be able to do this. Why? Because any residual that will be there, any residual that will be left out, that is something which will get distributed to them, along with something which has already been agreed. Okay, so that's why what should you do? You should now move on to the realization account and cash account. Okay, now ideally it's good that you prepare this simultaneously, but because we had to discuss a lot of accounting entries, then if we just keep flipping up, it creates confusion. So that's why we have not prepared this simultaneously. I'm just hoping you would have prepared this. Okay, so now in the realization account, we can just pass all of these accounting entries. So various assets were transferred, various liabilities were transferred. Then the balance of Y Limited in respect of purchase consideration was transferred. Okay. Cash expenses not reimbursed were transferred. Settlement to preference shareholders in excess. So whatever was there is transferred. Okay. Then forget about this number of 3,82,500. This is going to be the balancing figure. Yeah. So if there will be a gain, it will get transferred to equity shareholders. If there is a loss, that will also get transferred to the shareholders. Okay. But before that, we'll also look at the cash account. To begin with, there was a balance of 70,000. Okay. Yeah. Then we received 2,500. Sorry, we paid 2,500. Okay. We received 2 lakh. Yeah. We also received 10,000 from Y Limited, and we kept paying some of the amounts, 2,500 for those expenses of liquidation. Yeah. Then we paid debenture holders 12,000, 10,000, which was received from Y and then paid for liquidation expenses. Okay. 40,000 to the preference shareholders. Yeah. So the balance amount, anything that will remain, will get transferred, will get distributed to whom? Equity shareholders. Okay. Yeah. So now if you look at the cash account and if you look at the realization account, we have got the balancing figures, fine, which will get transferred to equity shareholders. So let's try to understand as to how you will record this. Asta has a query. Asta is asking, sir, I could not understand about the amount of debenture holder, 12,000. No worries. Huh? Do you remember this accounting entry? This 12,000 interest which was outstanding, which was not taken over by Y Limited, which was required to be paid by Z Limited on its own. Remember? Remember, Asta? Yeah. So this amount was paid to whom? Tell me. This amount was paid to whom? Tell me quickly. Where was this amount paid? Quickly. Where was this amount paid? Debenture holders? Yeah. So this is what has been taken over there. Now clear on this? Clear on this? Yeah. So where did this amount come from? Now clear? Great. Okay. So Larry has a question. Larry is asking, so debenture holders were paid in cash and not through realization account because they were not acquired by Y. Am I correct? Yes, absolutely correct. And that is why nothing has been paid to them. Why? Because who will make the payment to them as and when required? Why? We have just simply transferred all the debentures to Y. So Y will have to deal with them. When Y will prepare the books, Y will take care of them. We don't need to worry about it. So any asset or liability that has been taken over, we don't need to worry. Why? Because we are Z Limited. Z is saying why you take over these assets and liabilities and deal with them. Okay, clear? All right. So now, as a next step, equity share capital will have to be debited. Yeah. So if you look at the balance sheet, if you go back to the balance sheet, what was the equity share capital of Z Limited? It was 8 lakh. Correct? It was 8 lakh. Okay. And against this equity share capital, we understand that two amounts were payable to them. One, equity shares issued by Y Limited amounting to 11 lakh 20,000. And second was cash of rupees 1 lakh 60,000. So these two amounts were payable to them. Okay. Now, as regards cash, we will not look at this 160. Why? Because we have considered this cash collectively. Okay. We have considered that cash in a collective manner. So let's try to pass these accounting entries. So equity share capital will debit plus various other reserves. Capital reserve was there. Okay. So there was a balance of profit and loss account which was there. Workman compensation reserve, which was treated in the nature of reserve, that was also there. So you'll have to close all these reserves as well. So all of these reserves will have to be closed. Yes or no? And corresponding to this, what will you do? You will have to make the payment to equity shareholders amounting to what? 11 lakh 20,000 plus 1 lakh 60,000. Yes or no? 1120 plus 1 lakh 60,000. Yeah. But as we understand that the books are getting closed. Okay. So that's why please forget about that 11 lakh 20,000 or 1 lakh 60,000, because now whatever is left that will be given to the equity shareholders. Okay. So that's why what will you do? You will also now transfer the gain or loss from the realization account. So from the realization account, what did we have? We had a gain on a net basis. Okay. Yeah, because this entire purchase consideration has already been considered. So there was a gain. So this gain will get transferred to whom? Equity shareholders. So plot it over here. And the balancing figure is payable to equity shareholders. Why? Because that is what is the entitlement of equity shareholders. Okay. Yeah. Now, as a next step, what is it that Z Limited will do? Z Limited will have to close the books. And for closure, equity shareholders will have to be paid. One, equity shares in Y Limited. So that will be transferred as it is. Equity shares in Y Limited, 11 lakh 20,000, those will be transferred as it is. And the balance amount, whatever is left out, belongs to equity shareholders. So that will be 1 lakh 60,000 plus or minus any cash balance. 1 lakh 60,000 plus or minus any cash balance. Okay. So in the given case, cash balance was in excess. Yeah. So this cash balance, this is again the balancing figure. Huh? So this entire cash will be paid to whom? Equity shareholders. Okay. Yeah. Now please remember, every time in the question when you will attempt this, please remember there's a check which is available. Okay, so in a way you can just check your answer. So what is the way you will be able to check? Your equity shareholder account should get settled with the cash balance. Now, please remember, in the cash account, you are not left with any balance. You have made it zero. Okay. So every time there will be a question, please remember, by asking for cash or by paying the cash, this account has to come to an end. So this is going to be a check for you. Okay. This is going to be a check for you. So every time when you will close your account, cash account, so your accounting entry should get knocked off on the basis of that excess or shortage of cash. Fine. Tambeshwari is asking, sir, if in case there is a negative cash balance, then you'll have to ask that cash from equity shareholders. Okay. Then you'll have to ask the equity shareholders to pay that much cash. Then you will say cash debit to equity shareholders. They will have to make the contribution. Yeah. Clear? So this was all about closure of books of the vendor company, or you can say the transfer company. Any questions, any doubts if you have on this, please ask me. Yes, over to you. If you have any questions, doubts around this, please let me know. See, the accounting entries are very simple, but it's very, very important to go with the flow. Whenever you attempt such questions in the exam, please try to maintain the flow. And quickly, and exactly this is what Tambeshwari is asking me. See what is going to be the flow. So there are two ways you can just remember this. Tambeshwari is asking, sir, how to remember these points, what to take first. It's very simple. Please remember that Z Limited as a company is coming to an end. If there is a company which is coming to an end, what should you do? You need to remember only two things. It will have assets, means one side will be that of assets, other side will be that of liabilities or the reserves or equity. So you have to just make all of them zero. Correct? Yeah. So in the exam, what do you need to remember? Pick up your balance sheet, pick up the financial statements. Just keep ticking each and every item. Keep ticking each and every item. Whether that has moved to the transferee company, if yes, it's closed. If that has not moved to the transferee company, tick it whether you have settled that or not. So in a way, that checklist is available to you in the exam itself. Why? Because you have a balance sheet. Please understand, what is the role of Z Limited? Nothing but to close all the items which are there in the financial statements. So once you close, what will you do? You will pass them. Either you will pay cash, you will transfer it to some other party, you will write off, you will write back. So exactly this is what you will do. Yeah. So of course, as an order, what you should remember is that first of all, follow each and everything in respect of the transferee company. Means whatever transferee company is taking, let's settle that first. So that should be part of your flow first. After that, you should look at the remaining assets or liabilities or the reserves as to how to settle them. That's it. Okay. Clear? Nitin is asking, sir, are companies coming to an end and close its books. So yes, great. So I think you're just trying to explain the steps. Great. Yes. Hardik is asking, sir, if specifically mentioned that cash is not to be taken over, then we will prepare the cash account. See, the cash account, anyways, we'll have to prepare, whether that's been taken over or not, irrespective of that. Why? Because eventually, when this settlement will have to be done. So maybe in the balance sheet, whatever cash is there, that's been taken over by transferee company. Let's assume, okay. But for settlement of various other assets and liabilities, cash may be required. Where will it come from? So a lot of information will be available in the question. You'll have to consider. So that's why please remember realization account and cash ledger, or you can say realization ledger and this cash ledger. These are going to be your working notes. So without these two, you will not be able to complete. So every time you'll have to get on to this. Yeah. Riddhi is asking, shall we be required to write the percentage in the exam? What do you mean by percentage? Huh? I couldn't understand. What do you mean by percentage? Okay, so I'm just hoping, Tambeshwari, you are clear on this. Okay, Sunia is asking, sir, can you please explain equity shareholder settlement once again? Sure. So now for the equity shareholders, you need to look at the realization account and the cash account first of all. Yeah. So Neha, are you clear on this realization account and the cash ledger? So if you look at these two, there's a gain. There's a gain. Where do you get this gain from? It's the balancing figure. If you look at the cash ledger, so there is this balance of 2,15,500. Okay. Now who will take these two items? Excess cash belongs to equity shareholders. Gain or loss belongs to equity shareholders. So therefore, when you will close the account of equity shareholders, so first of all, you will close the equity share capital. Then all the reserves belong to whom? Equity shareholders. So you will take all the reserves. Yeah. And after that, any gain or loss in the realization account. Simple. Yeah. So you'll get the balance to be payable to equity shareholders through this, which is what? Total of all of these. Total of all of these. Okay. Once you get this, what is going to be the next step? To pay to the equity shareholders. Now we understand that equity shareholders will be paid in two ways. One, the asset which has been received from Y. What was that asset? Equity shares issued by Y Limited. So that you will give to the equity shareholders. Number one. Number two, any balance has to be given in the form of cash. Cash is what? Bank for you. Okay, so by cash, we don't mean to say hard cash. So it will be like bank balance. Okay, clear? Nia is asking, sir, this workman compensation 3,000, where does it come from? So you look at the balance sheet. Huh? So if you look at the balance sheet, in the balance sheet, it is given. In the balance sheet, in the reserves and surplus, it is given. Can you see this? So this is the workman compensation reserve. 8,000. Out of this 8,000, 5,000 was taken over by Y. Remaining 3,000, which has not been taken over by Y. So that is the balance of reserve. Okay. Yeah. Then I think there's one more query from Tambeshwari. She's asking, just a minute. She's asking, can you tell P&L and expense not written off page 13.24? I'm not sure where are you picking this from. PL expense not written off. So what is this item? Okay, so I could not find any such thing. And anyways, so don't get distracted by any of these things. Okay, so whatever we have discussed, I think you're talking about this. Okay, so you're talking about this. Okay, great. See, if there is a P&L balance in the balance sheet, and that is a debit balance, or if there is any item which you will say as expenses not written off. So it is clarified that these are not assets. They are not in the nature of assets, and they will not get transferred to realization account. Why? Because these are more of in the nature of negative reserves. Okay, so that's how you should treat them. Okay, clear? Then Hardik is asking whether in the nature of purchase or merger realization account always will have book value. Not necessarily, and that is something we'll get to know. Okay, so we are not yet done. We are not yet done. So there are more things that are going to come. So you'll understand that. Okay. Okay, so Preeti, you're clear? Yeah. All right. So now what we will do is now as a next step on the same question, let me just understand. Okay, so Sania has one point. Sania is asking, sir, will we assume that cash is not taken unless mentioned? No, you should assume otherwise. Huh? You should assume otherwise. Okay, so if nothing is specified, you should assume it's been taken. Okay, and whatever you assume, it's better you specify that in the question. So give a note that this is your assumption. So if the question is silent, whatever you assume, give a note. That's it. Fine. Okay, so now as a next step, what we will do is now we will look at the books of the transferee company. See, in this transaction, we have so far looked at the books of only the transferor company. Yes or no? We closed its books, we looked at its journal entries, whether it was realization account or any such thing. Now, the approach of purchasing company or the acquiring company is completely different. Why? Because unlike Z Limited, Y Limited is not going to come to an end. Please remember. Yes or no? Who is the purchasing company? Y Limited. Y Limited is going to continue its business. Correct? Y Limited is going to continue its business. Okay. So therefore, Y's approach is not going to be that which Z had followed. So therefore, for two parties, the approach is going to be completely different. Understood? Yeah. So now, as a next step, what we will do is we will now look at the accounting entries in the books of Y Limited. Okay. Yeah. So we'll look at the accounting entries in the books of Y Limited. Fine. Now, please remember, question is same. Question is same. So the question has not changed. On the same question, we are now required to pass the accounting entries in the books of Y Limited. Okay. Now, if you look at the question, so if you look at the question, there was one information which we didn't focus much on, and that was about taking over assets and liabilities. We understand why did not take over cash, why did not take over one liability. Further, some of the assets which Y had taken over, land and building, plant and machinery, patents, they are not taken over at book values. They are taken over at agreed values. Now, agreed value could be a value less than the book value or higher than the book value. For us, it won't matter. For us, it won't matter. Okay. For us, what is going to be important aspect is that Y is taking over these assets at a different value. So if these are taken over at a different value, so that's why Y will have to record them at different value only. Okay. Y will have to record them at different value only. Yeah. So now let's look at the accounting entries in the books of Y Limited. So to begin with, Y will say that Y is purchasing business. So what is it that Y is going to get? A new business. So that's why Y will debit business purchase and credit the liquidator of Z Limited. What do you mean by liquidator of Z Limited? So there is a person who is appointed at the time of liquidation by the liquidating company. That person is called as liquidator. Okay. So each and everything which Y will provide, that will go to the liquidator. Okay. So that's why Y is saying that I am required to pay 17 lakh 20,000. Can you tell me where does this 17 lakh 20,000 come from? Quickly, where does this 17 lakh 20,000 come from? Very good. Riddhi says it's purchase consideration. Very good. Okay, Pranav has the same point. Now, this purchase consideration is payable by Y to liquidator of Z. Okay, so that's why it will say I'm going to receive a business purchase debit to Z Limited or to liquidators of Z Limited. Fine. Now, as a next step, as a next step, what Y will do is Y will now acquire all of those assets as well as liabilities. So therefore, if you go to the balance sheet, now you need to refer the balance sheet. Huh? In the balance sheet, we have land and building, but at agreed value. Plant and machinery, but at agreed value. Okay. Then there are some intangible assets. Patent, agreed value. Goodwill, I'll come to goodwill slightly later. Huh? Inventory, there is no agreed value, so that's why it will be book value. Trade receivable, no agreed value, therefore book value. Okay. Cash and cash equivalent, not taken over. Okay. Corresponding to these assets, some liabilities are also taken over. Debentures in Z Limited. Now, if you look at the information of the question, if you look at the information of the question, debentures have been taken over. Okay. And the question says that the debentures are to be treated as the one of rupees 105. So the debentures would have a face value of rupees 100 to be treated as one of rupees 105. So that means that on these debentures 5% extra money is required to be paid. So that's the agreed value. There again, that's the agreed value. So that's why debentures will be 2,10,000. Okay. Trade payable, nothing is specified. So therefore, book value 1,20,000. Provision for workman compensation reserve, which is in the nature of liability, 5,000. Yeah. And the business purchase account will be credited. Why? Because against this business purchase account, all the assets and liabilities will come. All the assets and liabilities will come. Now, please remember that in this question, assets and liabilities have been taken over at agreed value. Assets and liabilities have been taken over at agreed value. Yes or no? So whenever they are taken over at agreed value and not at the book value, what type of amalgamation will this become? What type of amalgamation will this become? Purchase. And the moment you say it's an amalgamation in the nature of purchase, at the time of amalgamation, you need to compute an amount. Can you tell me what is that amount called as? Goodwill or capital reserve. Yeah, that is what Larry says. Great. Goodwill or capital reserve. Now, how do you compute goodwill or capital reserve? Can you tell me? How will you compute it? How will you compute goodwill or capital reserve? Over to you, quickly. How will you compute goodwill or capital reserve? Tell me quickly. Nitin is saying purchase method. No, purchase method we understand, but how will you compute it? Great. So Preeti says if the balance. So I think you're talking about the balancing figure. Huh? No. So I think you're just trying to look at the question right now. Okay. The solution which is there in front of you. Very good. So Astha has answered this. Astha is saying purchase consideration less net assets which are acquired. Okay. Now in this case, in this question, what is the amount of purchase consideration? 17 lakh 20,000. And what is the amount of net assets? All of these assets taken together less the liabilities. All of these assets taken together less the liabilities taken together at agreed values. Please remember, at agreed values. So the balancing figure will become what? If it's a debit, this will become goodwill. If it's a liability, it will become capital reserve. See, either you can compute this amount in the working note, or you can just simply say it's the balancing figure. So whenever these assets and liabilities are taken over, because goodwill and capital reserve are required to be computed, so therefore, what do you need to do? You need to acquire all the assets except goodwill. Why? Because it may happen that net you are getting goodwill. So whatever is the balance of goodwill, that will automatically get added to that. Or it may happen that net you are getting capital reserve. So whatever will be the amount of goodwill, that will get adjusted against the capital reserve. Because in the balance sheet, you can show only one amount, goodwill or capital reserve. You can't show both. Understood? Understood? Yeah. So in this case, what's the balancing figure? Goodwill. Yeah. What's the balancing figure? Debit. That's why it's goodwill. Clear? Okay. Riddhi is saying, sir, how do you get the value of debentures? 2,10,000. Okay, great. Let's try to understand this. So let me just take you to the question first. Okay, so Riddhi, if you look at the question, so it says, okay, this part, rupees 2 lakh 7% debentures of rupees 100 each in Y Limited. Okay, so there is a settlement to the debenture holders. So how are they going to be settled? So Y Limited will issue debentures of rupees 100 each. Okay, so the face value will remain of rupees 100. But for this purpose, each debenture of Y Limited is to be treated as worth of rupees 105. Okay. Now for this purpose, what is required to be done? A premium is required to be paid on this. So for the debentures worth of rupees 2 lakh, you need to pay them a premium of 5%. So if you compute 5% on 2 lakh, what do you get? If you compute 5% on 2 lakh, what do you get? Tell me quickly. 2 lakh 10,000? Yeah, Riddhi? Yeah. So that's how you get 2 lakh 10,000. Clear on this? Okay. Okay, Hardik is asking, sir, 2,65,000 plus 2,40,000. Sir, do we have to show it like this? No. You just need to pick up the net amount. I'm assuming you're talking about goodwill. Okay. Yeah. All right. So now coming back to the accounting entry. Yeah. So this second accounting entry, which we passed, in this case, Y Limited has acquired all the assets, all the liabilities, and corresponding to this goodwill or capital reserve, whatever was required to be considered, that's also been considered. Okay. Now, the next step. Now, corresponding to this liability or this payable of 17 lakh 20,000, remember in the first accounting entry, a debit was created against which assets and liabilities have been received. But a payable was recorded. What was that? Liquidators of Z Limited. So now this party will have to be settled. And how will Y settle that? 2 lakh will go in cash, then preference share capital, then equity share capital. And if you remember, if you go back to the question, okay, if you go back to the question said that one equity share in Y Limited, each having market value of rupees 140. Okay, so let me take you back to the question now. Yes. So for each equity share in Z Limited, rupees 20 in cash, and for each equity share in Y Limited of rupees 100 each, having a market value of rupees 140. Okay, so what does it mean? So what does it mean? 40% is the premium. For this 8 lakh, 40% is going to be the premium. Correct? Yeah. So now, when Y will record this, so what will Y do? Now, please remember, Y has issued this new preference share capital. Y has issued these new equity shares. To whom? Shareholders of Z. Whether those are preference shareholders or equity shareholders. Okay. Therefore, corresponding to this, if there is a premium, so that will also be recorded as security premium. Yes or no? Yeah. So corresponding to this 40, the amount will go under security premium. Can it go under equity share capital? Tell me. Can you take it under equity share capital? The answer is no. Hardik says no. Yeah. Understood? Okay. Now, moving further, next entry. Next entry will be in respect of debentures. Yeah. So now the debentures in Z Limited, which have been acquired. Remember, debentures in Z Limited which were acquired, 2,10,000. To these debenture holders, what is going to happen? Debentures of Y will be issued. To these debenture holders, debentures of Y will be issued. And there was a premium of 5%. So that's why what will happen? Debentures of Z will come to an end and debentures of Y will be issued. They are again at a premium. So that's why 10,000 will also go to premium. This 10,000 will also go to premium. Okay. So this also goes to premium. Further, there was a liquidation expense of rupees 10,000 which Y was required to incur. So this liquidation expense will also go to goodwill. So this will also go to goodwill. Why? Because it's a kind of payment which Y is required to make to Z Limited. Okay. So this liquidation expense will go to, against this cash is paid out, but where will this be debited? There's no realization account and this will not go to P&L. Why? Because it's a cost to acquire Z Limited. So a cost to acquire Z Limited will be taken to goodwill account. Okay. If at all it was a capital reserve, this would get reduced from capital reserve, whatever be the case. Understood? Understood? So these are the accounting entries which Y Limited, acquiring company, purchasing company will have to pass in respect of the acquisition. Understood? Yeah. Any questions, any doubts, if you have, please let me know. Then we'll take a break. Okay. Tambeshwari is asking, sir, where is this 10,000 in the question? In the question, So please look at the question. Huh? So 10,000 of the expenses are reimbursed by Y. Okay, Nitin is asking, sir, this goodwill. Okay, great. So are you asking about this goodwill, Nitin, or the previous one? Which goodwill you are asking? Tambeshwari is clear on this. Which goodwill you are asking? The previous one? Okay, no worries. So now for the previous one, Nitin, I would suggest if you can just understand the concept. Huh? See, as around the goodwill, we discussed that how do you compute goodwill? If let's suppose there's a purchase consideration 100 and the net assets you acquire. Net assets means assets less liabilities. That is 70. Okay. So if the purchase consideration is in excess, then what will you call it as? Goodwill. Okay. If it is other way around, let's suppose purchase consideration is 50 and the net assets acquired is 70. So this negative 20, what do you call it as? Capital reserve. Remember this, Nitin, remember this. Yeah. So the same calculation you need to do in this particular example. You will get the answer. Okay. You understand which all assets have been acquired, which all liabilities have been acquired, and you also have the purchase consideration. Okay, so can you tell me, solve this, apply this concept, and tell me whether you are getting goodwill or capital reserve? Dilip is asking, sir, can I say Y Limited prepares books on accrual basis and Z Limited on cash basis? No. See, there's no accrual or cash basis. Both of them are doing on accrual basis. It's just that for Z, the company is coming to an end. Yeah, so everything which Z will record will also get settled. Okay, so the basis of accounting is not changed. Huh? Hardik is asking, sir, if there is capital reserve, then capital reserve account debit to cash? Yes. Jinky is asking, sir, will we prepare a cash account in this question? See, in this case, you are not required to do that. Anyways, huh? Why? Because if you look at the acquirer or the purchasing company, so therein you are not going to settle everything forever. Yes or no? Yeah. In the case of transferer, it becomes important. Why? Because the cash has to come to an end. But in case of transferee, it's a running company. Okay. So cash balance could be there. So if the question will ask, you will prepare, otherwise not. Okay. But if you find anything important with which you are getting more comfort, then you can just feel free to do that. Huh? But in the working notes. Okay. So any other working which you require. Okay, great. So Nitin is clear on this. Very good. Preeti is asking, sir, we are paying this consideration to shareholders of Z Limited. Can we write the shareholders of Z Limited the amount of 1720? No, no. See, please remember, this is not directly given to shareholders of Z Limited. It is routed through liquidators because Y will not give to direct. Y will not give this directly. So there is a mediator in between who will take it over and then pass it on. So that's how it works. Okay, and you should follow the same thing. Otherwise, you'll lose out marks. So don't try to get into all of those things. You'll lose out marks. Fine. All right. So I think we can take a break now. Yeah. So let's continue after the break. Manish, we can take a break now. All right. Hi. Welcome back. So I think we can just continue now. Yeah. So we'll practice some more questions. Okay. So now the next question I think we can pick up is just give me a minute. Okay. So let's move on to this page 13.44. Question 8 we can do. Huh? Okay. Okay. Yeah. So let's move to this. In the meantime, I can see this query from Balachandra. He's asking if there's a negative balance in realization account. So that's a loss. Okay, so in the example we covered, there was a gain. So if it's a gain, you'll record it to the shareholders account. If it's a loss, you'll record it to the shareholders account. So for us, it doesn't matter whether it's a loss or gain. For us, what matters is that whatever is the balance amount, that belongs to whom? That belongs to the shareholders only. Yeah, so that's how you need to consider this. Fine. So every time you need to remember this principle. This principle you are not required to forget. Okay. All right. So now moving on to this question 8. So we are given financials. I think the balance sheets of two companies, X and Y. So certain financial information is available. Share capital, reserves. The numbers are in thousands. Okay. Then we are given liabilities. So then we are given some assets. Okay, so then the notes to accounts are given. So in the notes to accounts, if you look at reserves and surplus includes various reserves. Okay, long-term borrowings are there, which includes only debentures. Then further, if you move, some additional information is also covered. X Limited takes over Y Limited. X Limited discharges the purchase consideration as below. Some equity shares are given, some preference shares are given. Debentures of Y Limited will be converted into equivalent number of debentures of X Limited. Obviously. Statutory reserves of Y Limited are to be maintained for more than 2 years. Okay. You are required to show the journal entries and the balance sheet of X Limited. Now, whose financial information is required to be drawn? Journal entries, balance sheet of X means transfer company, purchasing company. Okay. For Y it is not required. For Y it is not required. Okay. So there's only journal and balance sheet, but the question specifies that two ways you are required to consider this. First assumption, you will consider this to be an amalgamation in the nature of merger. Second, you will consider this to be amalgamation in the nature of purchase. Now, some of you may have a question that how can these two be similar? How can these two apply to same fact pattern? Because these are uh, not something which can exist mutually. See, you'll have to go by the requirement of the question. So if the question requires you to consider certain methodology, consider a specific type of amalgamation, then ignore it as to what is required in terms of your assessment, or whether as per your assessment it will become a merger or a purchase. No, you are not required to do that. Simply you'll assume and you will do the accounting entries accordingly. Okay. So now the first assumption or the first scenario wherein it's an amalgamation in the nature of merger. Now in this case, will the accounting entries be different from the one that we just looked at? The answer is no. There's only one point of difference you'll have to remember. When it comes to amalgamation in the nature of merger, goodwill or capital reserve are not computed. Means you will not do that calculation or the differential. So what is goodwill or capital reserve? Differential means excess of purchase consideration will be there, or if the shortage is there, you will not take that to goodwill or capital reserve. So you can say in a way it's an accounting treatment. So if the purchase consideration is paid in excess or is paid in short, so the differential in case of amalgamation in the nature of purchase, where are you taking these amounts to? Goodwill or capital reserve respectively. But if it's an amalgamation in the nature of merger, will you take it to goodwill or capital reserve? The answer is no. So whether it is excess or short, in both the cases, where will you take it? You will take it to general reserve. You will take it to general reserve. So you can say that principally, this is the difference you need to remember. This is the difference you need to remember. Clear on this? Yeah? All right, clear? Okay, so now another point. In the case of amalgamation in the nature of merger, can you please clarify what is that point? So if in case it's an amalgamation in the nature of merger, there's one more adjustment you are required to do. So can you tell me what is that? There's one more adjustment you are required to do. What is that? Very good. Hardik says because the identity of the reserves are required to be made, which otherwise would have got sort of dissolved with any other reserve. That's why for maintaining that identity, one notional, a kind of debit balance is required to be created, over which I understand you had a lot of questions, how to present it, where is this required, can you reduce this, can you show this to the asset side. So all of those aspects we'll discuss now. Yeah. So all of those doubts as around that presentation hopefully should go away now. Okay. All right. So now to begin with, every time in these questions, what will you need? Purchase consideration. Every time in these questions, you will need purchase consideration. So can you tell me what will be the amount of purchase consideration? Over to you. What will be the amount of purchase consideration? Quickly. Please solve this and let me know what will be the amount of purchase consideration. Kasak is getting 53,70,000. Can you tell me how did you get this amount? How did you compute this amount? 3.7 lakhs. How did you get this? Quickly, huh? 53.7 lakhs. How did you get this? Anyone else? If you can just quickly. Okay, great. So Nitin has solved this. Nitin is saying there are two parts. One, if you look at the equity shares, 3,50,000 equity shares of rupees 10 each, you will issue. So what does it give you? 35 lakh. Correct? Then it says preference shares will be issued. Preference shares will be issued of rupees 100 each. Preference shares will be issued of rupees 100 each. Now please remember, preference shares will not be issued at a premium. Preference shares of rupees 100 each will be issued. So what is the preference share capital of Y? 17 lakh. 17 lakh. Now these preference shareholders will be paid in excess. 10% premium means they will be paid 10% extra. So what does it become? 17 lakh plus 10%. 1 lakh 70,000, 18 lakh 70,000. So 35 lakhs plus 18 lakh 70,000. So what do you get? 53 lakh 70,000. Yeah. Okay. So every time in the question, you will have to calculate this. Okay. So let's move on to the accounting entries now. Great. Tameshri, Pranav, they have also solved this. Great. Now, first, X will say business purchase debit to liquidators of Y. Next, now in the next step, X will acquire assets liabilities of Y. Yeah. So various assets are there. If you look at the balance sheet of Y, assets which have been acquired, all the assets have been acquired. So all the assets are appearing at 66 lakhs. Are we given any agreed values? No. So therefore we'll go by the book value, 66 lakhs. Okay. Now, various liabilities have also been taken over. So if you look at the liabilities, so we have long-term borrowings, then trade payable and other current liability. So three liabilities are there. Long-term borrowing, debentures, trade payable, other current liability. So if you take the total of these three, what do you get? 8.5 lakhs or 8,50,000. Okay. In this case, because it's an amalgamation in the nature of merger, so that's why all the reserves will also move as it is. In the case of amalgamation in the nature of merger, all the reserves will move as it is. Yeah. So what all reserves that you have in the books of Y? Export profit reserve, it seems to be a statutory reserve. So you'll take it. Investment allowance reserve, 100,000. Profit and loss balance, this is again a reserve, 5 lakh. Okay. Then there's also a general reserve. We'll talk about it separately. Then the business purchase. So this debit will get credit. So against this business purchase, all of these assets, liabilities are getting transferred. So we'll credit this. Now in this case, because it's an amalgamation in the nature of merger, so any differential which gets generated, okay, so there are two ways you can look at it. There's a general reserve of 2,50,000. We have not considered that. Can you see this? In the books of Y, there is a general reserve of 2,50,000. We have ignored that. Yes or no? Yes or no? Yeah. Can you see that? There's a general reserve in the books of Y that's been ignored. Yeah. Why is that so? Because any differential which will arise at this point of time, that will go to general reserve. That will go to general reserve. Okay, Kasak has a question. Kasak is saying that how did you get the amount of liability? Very simple. Huh? So there are three liabilities. Long-term borrowing, trade payable, other current liability. So these three are the liabilities. Take the total of these three. Tell me what is the amount, Kasak? Tell me quickly. Have you computed this now? Tell me quickly. Kasak, you are there? Yeah, got this answer? Okay. Now, we were talking about general reserve. So, see, there are two ways. Similar to what we discussed in the previous example. Either you now put down this amount of general reserve in the assets, liabilities, and the reserves which have been transferred. Or you can just take it to the balancing figure. Or you can just simply take it to the balancing figure. Clear? Clear on this? Now, in this accounting entry, general reserve has been ignored. Why? Because we are getting a net debit balance. Net debit in the balancing figure. So this debit balance will go to what? This will again get transferred to general reserve, because we discussed that if it's an amalgamation in the nature of merger, then any excess or shortage of the purchase consideration over net assets, where do you take it? It goes to general reserves. Okay, clear on this? Everyone clear on this? Any questions so far? No? All right. So now moving further. Okay, great. Nero is clear. Okay, I understand. Neha is getting. Neha is getting. How do you get general reserve? So it's the balancing figure. Huh? It's the balancing figure. So to complete this accounting entry, this is the balancing figure. Kasak is asking if the balance is more. So see, it's the balancing figure. Huh? So in this accounting entry, this is your balancing figure. It could be a debit or credit depending on the amounts of other assets or liabilities. Larry is asking in the nature of purchase, if there is an excess, it will go to goodwill. Yes. And we'll also discuss that. Okay. So please park that. Huh? Do you remember the question? It requires you to do both the things in the nature of merger as well as in the nature of purchase. So purchase anyways will cover up. So let's not get into that. Otherwise there will be a confusion. Why to get into that? Okay. Tambeshwari is asking where do we take this entry of general reserve 250? See, there are two ways. Either you take it over here and then this debit balance will increase, or you can just net it. Okay, you can just simply ignore it. So automatically now what has happened? Your general reserve has got reduced. Yeah, either way you can do this. When we'll prepare the balance sheet, automatically you'll get to see all these balances. Fine. Okay, now as a next step, these liquidators of Y Limited. So they need to be paid now. They need to be paid. Okay, so let's settle them. So liquidators of Y Limited will be paid by issuing the equity shares, 3,50,000 we discussed, and issuing the preference share capital. Please remember, the preference share capital is not issued at a premium. Okay, in this case, we have not taken 1,70,000 to the premium. Yeah, so you may have a confusion that the question is asking you about the premium. So why are we not taking the credit to the security premium for 1,70,000? That is because the question has clarified that X will issue preference shares of rupees 100 each. Yeah, even though the payment to the preference shareholders will be more. For that, what will happen? Number of preference shares will increase. Okay, so preference shares are not being issued at premium. Number of preference shares have got increased. Understood? Yeah. Okay, then we understand that the debenture holders are also required to be settled. So what will happen? You will debit those debentures of Y Limited and issue the debentures of X Limited. Issue the debentures of X Limited. Correct? Clear? Yeah. Any questions so far in any of these accounting entries? Quickly. So these are the accounting entries you will pass in the books of X. In the previous example, there were a lot of accounting entries we discussed. But why was that required? Because in that case, we were looking at the books of vendor company as well. Now we are not preparing the books of vendor company. Okay. It's only vendee. It's only transferee. Okay. Clear? Everyone clear? Quickly. Everyone clear on this? Yeah. Everyone clear? Great. Nitin is clear. Larry is clear. Great. Now, as a next step, we are required to prepare balance sheet of X Limited. Oh, just a minute. Now, as a next step, we are required to prepare balance sheet of X Limited. So let's get on to the balance sheet of X Limited. Now, when X Limited will prepare its balance sheet, so what will happen? One balance sheet of X Limited is already given to you. Yes or no? One balance sheet of X Limited is already given to you. In this balance sheet of X Limited, what will you do? You will just simply merge all the assets and liabilities which have been taken over. As simple as that. Yeah. all the assets and liabilities which have been taken over, you will just simply merge that. Means you will add or less. Yeah. So that's the thing you are required to do. Yeah. Great. So Kasak says amount taken from Y Limited will add up in X. Yes. I should not say amount. This should be like assets or liabilities. All of those things will add or deduct, whatever be the case. Okay. Now, let's go to the balance sheet of X. I think you'll have to look at the question first. See, when you will prepare this balance sheet, what is going to be your starting point? The balance sheet which is given in the question. So that's going to be your starting point always. Please remember. So the balance sheet that you are given in the question, that is going to be your starting point always. That is what you need to start with. Yeah. Now, in this balance sheet which is given in the question, what do you have? In the balance sheet which is given in the question, what do you have? You have share capital reserves, correct? So let's plot all of these numbers one by one. For share capital, what do you do? Let's go to the note only. Okay, let's do the notes only. Okay, so in the notes, now this is the question, please. See, this is the question. There are two types of share capital of X, equity and preference shares. So that will remain 50 plus 22, that will remain. To this 50 and 22, we'll have to add the new equity shares and the new preference shares that have been issued. Yeah. To this, we'll have to add the new equity and the preference shares which have been issued. So what will happen? Equity share capital will become 8,50,000, means 5 lakh plus 3,50,000, and preference share capital will be what? That will be the one which is appearing right now. So that was 22 lakh. That is already existing. The new shares which have been issued to the shareholders of Y, shareholders of Y, that was 18,70,000. Okay, but the coupon rate was different. That's why you are keeping these two separate. Coupon rate, if you remember, for X existing preference shares was 14. The one which is issued to Y is at 15%. So that's why these two you are keeping separate. Okay. So now from the note, you will also plot this information in the balance sheet face. Okay. So this will flow to the face of the balance sheet. Fine. Then next step. Next step will be to get on to the long-term borrowings. On the long-term borrowings, we just simply need to add up. Yeah. So it's 5 lakh plus 3,50,000. So 8,50,000. So this will become 8,50,000. Yeah. Because a note is given in the question. So that's why in the solution, it's better that you prepare the note for this one also. Okay. So it's better you prepare the note for this one also. Right. So if you look at the note, reserve and surplus will come to this later. 8,50,000. From this, it will go to the face of the balance sheet. 8,50,000. Then trade payable, you just simply need to add up. 4,50,000 plus 3,50,000, 8 lakh. Yeah. Nitin seems to have computed this. Very good. Other current liabilities, you need to simply add up. 2 lakh plus 1,50,000, 3,50,000. Okay. PPE, there again, you need to just simply add up. Non-current assets, simply add up. Inventory, trade receivables, cash and cash equivalent, all you will just simply add up. But please remember some of these notes, whichever note is given in the question. So please make sure that you are also preparing at least those notes. Okay, at least those notes you are preparing. Okay, you may prepare more. Nobody is stopping you from doing that, but at least these notes you should prepare. Again, depending on the weightage of the question. Yeah. So I think we have plotted all the items in the balance sheet except for reserve and surplus. Yeah, except for reserve and surplus. Now, let's move on to the reserve and surplus one by one. See, if you look at the reserve of X, first of all, let's add it up. Let's add it up. Reserve or general reserve of X, general reserve of Y. Okay. Then export profit reserve of X, export profit reserve of Y. Then investment allowance reserve only for Y, because for X it was nil. Then P&L balance for X as well as Y. Now, out of these reserves, export profit reserve and investment allowance reserve are, they are what? They are, tell me, out of these reserves, export profit reserve and investment allowance reserve, they are what? They are, tell me quickly, they are statutory reserves. Okay, they are statutory reserves. Okay, now in this case, we have got this much amount of statutory reserve. Okay, therefore, for these reserves, what do you need to do? You need to create, no, sorry. So I think in this case, you are actually treating them. Now, in this case, you are treating them as it is. You are not changing the identity. You are not changing the identity. Okay. So anyways, you'll keep it as it is. Yes or no? Okay. So now if you look at the balance sheet, you are keeping them as it is. You are not changing the identity. Just give me a minute. Okay. So you are keeping them as it is. Okay. Now in this case, if you remember when we passed this accounting entry, when you pass this accounting entry, there was a debit to the general reserve. Can you see this? There was a debit to the general reserve amounting to what? 4,20,000. Yeah. See, there are two ways you can present this. There are two ways you can present this. So let me just do one thing. Let me just show this presentation to you in the reserves and surplus. So what I'll do is I'll just look at that particular reserve. Okay, so now we are on note 2, reserves and surplus. General reserve is what? For X, it is 500. For Y, it is 250. Okay. So all in all, it becomes what? 750. Okay. Now, corresponding to this, there is an adjustment at the time of amalgamation which is required to be passed. What is the amount of that adjustment? Less adjustment for or due to amalgamation. Now, what was the amount of that adjustment? Due to that amalgamation, general reserve will get reduced by 420. Yes or no? Tell me. Due to that adjustment, general reserve was getting reduced by 420. Yes or no? Yeah. So what should you do? You should do 420 negative. Correct? Yeah. But this negative 420 you are getting, please understand, this is very, very important. You were getting this negative 420 when you had skipped, when you had ignored this 250 in the journal entry. If you go back to the journal entry, yes or no? Yeah. If let's suppose you include the amount of 250 in the journal entry, if in that journal entry you include the amount of 250 in the reserve side on the credit side, then what will be the balancing figure? Will that still be 420 or will it increase? Tell me, will that be 420 or will it increase? Quickly tell me. If you include 250 on the credit side, so it will increase by 250, by 250. Yes. Okay. So therefore, there are two approaches I would say you can follow. Okay. So you need to explain this in the working file or in the working note. Either you can just simply ignore it over here and write down this adjustment as 420 negative. So if you do that, what will happen? This will also change. Then the balance that you will get will be 80. So I'm saying this is one of the ways you can do this. I'm just trying to explain this conceptually to you. Yeah. There is one more way you can follow. Something which is also given in the solution. Now, what is the other way around? You pick this general reserve of X 500, general reserve of Y 250. Okay. But in this case, because you have added the amount of reserve, therefore the adjustment for amalgamation, therefore the adjustment of amalgamation will not be 420 now. Yes or no? That will be 420 plus this 250. Yes or no? That will be 420 plus 250, which will become 670. Eventually, the solution that you will get means the amount that you will get to present in the balance sheet in both the cases. Okay, in both the cases. So let me just call it as A and this is B. Okay, so in both the options, the amount of general reserve in the balance sheet will not change. Can you see this? That will not change. And principally, that should not change. Yeah, because if you change that, that will be inappropriate. If you change that, it will be inappropriate. Yeah, but yes, either of these approaches you can follow, but whichever approach you want to follow, you should explain that in the working notes. Everyone clear on this? Any questions, any doubts if you have on this, please let me know quickly. Any questions, any doubts if you have on this? Over to you quickly. Yeah, so Nitin is clear on this. Ajay is clear. What about others? Everyone clear? Preeti seems to be clear. Yeah. So at times, this type of adjustment, which I have just tried to explain you through this working, may confuse you. So that's why the idea was to help you understand this point. So Tambeshwari has shown some working. I think she has derived 1930. So the idea is to reach to the solution. And in terms of reaching the solution, Tambeshwari, I'm not looking at the other numbers. I'm just looking at this number or this aspect. So in this case, you can follow either of these approaches. Hardik is asking, sir, this adjustment is a difference from the reserve. which we do in purchase? Yes. See, similar to what you do in the amalgamation in the nature of purchase, wherein you take the differential to goodwill or capital reserve. Same way. See, please remember, please try to understand this concept. Let's suppose, this is the situation that we discussed. Let's suppose 100 is currently paid, through which you are getting net assets worth of 70. So that means there is some excess. If let's suppose 50 is paid, again the net assets worth of 70, that means short amount is paid. Now, if you are saying that this is an amalgamation in the nature of purchase, then what do? You take it to goodwill or capital reserve. That's the accounting treatment. But does it mean that the purchase consideration could be in excess or in short only in the nature of purchase? The answer is no. Even if there is an amalgamation in the nature of merger, this excess or shortage could be involved. Yes or no? Yes or no? See, the excess payment or the short payment could also be there if it's an amalgamation in the nature of merger. Yes or no? Do we have any such criteria that if it's an amalgamation in the nature of merger, then the purchase consideration should always match the net amount or match the net amount of the assets acquired? Tell me, do we have any such criteria? Tell me quickly. The answer is no. So even in that case, there could be an excess or some short payment. So the point is, if that's an excess or short payment in the nature of merger, then such excess or short in the nature of merger, where do you take them? General reserve. Okay, you'll take them to general reserve if it's a amalgamation in the nature of merger. Now clear on this? Yeah. So you can just simply say that the accounting treatment is different in respect of excess or shortage that you have. But in both the cases, whether it's amalgamation in the nature of merger or amalgamation in the nature of purchase, in both the cases, this differential you will be required to compute. If you don't compute that, then how will you complete the accounting entry? Yes or no? Because the accounting entry will be completed only when you compute these amounts. Okay. Yeah, everyone clear on this? Everyone clear on this? All right. So now, great. All right. So now what we will do is we'll just park this second part. So for this question, the second part requires journal entries to be passed in the books of X Limited, considering this to be amalgamation in the nature of purchase. Okay. So we'll just park this, or maybe you can just consider this to be your homework. Okay. And you need to solve this and let me know your answer. Okay, that part we plan to cover in the next session, because I don't think time is going to be appropriate for us to complete that with a peace of mind. So what I'll do is, okay, maybe in the meantime, what we can do is we can just move on, okay, to the next concept around this. Okay, there are some more things which are required to be considered whenever an amalgamation is carried out. Whenever there is an amalgamation, so there are few more aspects which you are required to consider. So let's quickly try to touch upon some of those concepts as well. Okay. Now, if let's suppose there's an amalgamation, now we are not talking about whether it's in the nature of merger or purchase. Okay. At times, what may happen is, say A Limited has acquired B Limited. Now, between the transfer and transferee company, it may have happened that before the amalgamation, these companies were transacting with each other. Maybe there was sale or purchase of goods, or maybe one company had given a loan to the other company, or maybe there was an exchange of some assets from one company to another company, and it could be either way around. So it may go from A to B or B to A. Doesn't matter. Now, these transactions, which would have been carried out between A and B, if at all there is any closing balance in respect of that. Okay, what does it mean? Say B has sold assets, goods to A, for which debtor is outstanding in the books of B. And for A, there will be a creditor in the books of A. Now, if let's suppose there's an amalgamation of A and B, so what will happen? B will come to an end. So therefore, B will come to an end. B will get merged with A. Now, when B will get merged with A, so this debtor will also shift to A. Because this debtor will shift to A, so can A say that it is required to pay to itself? The answer is no. Yeah, the answer is no. So that's why at the time of amalgamation, any such transaction or any such balance which is there in respect of such a transaction is required to be knocked off with each other. Okay, all these balances are required to be knocked off. Otherwise, what will happen? If let's suppose tomorrow A Limited prepares the balance sheet. Let's suppose it prepares the balance sheet after amalgamation. So what will happen? A Limited will have an asset, debtor, say of rupees 100, and there will also be a creditor of rupees 100. Now, in this case, this creditor is in respect of what? Payment to B. B is gone, so that's why this 100 will be paid to whom? A only. And this debtor is required to be collected from A only. Does it make sense? The answer is no. So that's why what will you do? You will have to knock off these two. So these two will have to be therefore knocked off. Yeah, similarly, if there is any such balance which is intercompany in nature, you'll have to knock off that. You'll have to knock off that. So those will be required to be knocked off. Now, whether that is in respect of loan, sale of goods, debtor creditor, whatever be the case, so those are required to be knocked off. Clear? Clear on this? Yeah? All right. So now we can just close our discussion over here. And I think we can now discuss your questions, your doubts, anything that you are still left with. Okay. Okay, Nitin is saying, sir, we'll be able to do this part B of question number 8. Very good. And even if you are not able to do that, anyways, we'll pick up that in the next session. So Tambeshri is asking, how do you pass this accounting entry? Very simple. Creditor you will debit, debtor you will credit. You'll have to make these two balances zero. So that's how you'll do this. Okay. Kasak is asking, sir, after the set off creditor and debit will, yes, they will not appear. So that is what you call as knock off. Okay, Neha is asking, explain adjustment due to amalgamation. So adjustment due to amalgamation was that if let's suppose you are paying a purchase consideration of rupees 100 and you are acquiring net assets against this, say of rupees 70. Now, in this case, 30 is paid extra. 30 is paid extra. And if it's an amalgamation in the nature of merger, then can you take this 30 to goodwill? Tell me, Neha, can you take this 30 to Goodwill? Tell me, can you take this to Goodwill? The answer is no. So where will you take it? You will take it to general reserve. So that's the adjustment. That's the adjustment. Okay. Now in this case, this general reserve, you will have to debit. Why? Because this is excess. So that's the adjustment for amalgamation. Clear? Clear? Okay, so Larry has a question, sir. I didn't understand about preference shares. If it is not issued on premium of 10%, then why did we increase it by 10%? All right, no worries. So let's suppose there are two parties, A and B. Okay. Now, A will take over B. A will take over B. And there's an understanding. What is the understanding? B has preference share capital of 2 lakh. Okay. So A says that don't worry, I'll make the payment to these preference shareholders. Okay. And A says, when I'll make the payment to these preference shareholders, I'll issue equity share, I'll issue preference shares at par. I'll issue preference shares at par. So what does it mean? Say of rupees 10 each. Okay. But preference shareholders, these preference shareholders, they are saying that whether you issue equity shares of rupees 10 or at a premium, means what? Whether you issue rupees 10 each or you say you are issuing at a premium, it doesn't matter to us. What do we want? They are saying we want 10% extra. 2,20,000 is what we require. Okay. Now in this case, if A is required to pay 2,20,000 to the preference shareholders, so there are two ways. There are two ways. What are the two ways? If there's a preference share of rupees 10 each, then how many preference shares will be there? 20,000. Okay. One of the ways was issue 20,000 preference shares of rupees 10 each plus security premium. So that was option number 1. So that was option number 1. Okay. The other option is what? If you are required to keep the preference share at par only, and you have to reach this amount of 2,20,000, then what will you do? You will have to increase the number of shares. So what will you do? You will say 22,000 preference shares of rupees 10 each plus security premium is nil. Nil security premium. So if you do that, there again you will be able to pay. There again you will be able to pay 2,20,000. So that is what has been done. Clear? Clear on this? Yeah. I think this was the query from Larry. Yeah, Larry, clear on this? Okay, great. Hardik is saying, sir, a request like in the question of exam, I've seen they just write to solve appropriately. They just write. So actually want to ask the hint to recognize the question like in illustration, sir, it is amalgamation in the nature of absorption. So sir, is there any hint which can tell us about it or no? So I would suggest, yeah, please go through all of these questions. I'm not saying solve all of these questions, just go through all of these questions because we have discussed all the concepts which were required. And anyways, in the next session, we are also going to start with consolidation. We'll also solve some more questions around it. Everywhere you will get to know as to which method you are required to apply or what the accounting requirements you'll have to follow. If you get stuck anywhere which you believe is a sort of confusion for us, you can just let me know. I'll help it over there. Okay. Otherwise, no hint is required. See, everything is there in the question. Huh? Why you're looking for hints? If the question is clarifying, this is how you're required to do. Okay. Apoor is asking, sir, if the purchase consideration is more than the net assets, then goodwill. If it's less than capital reserve, yes, then it will be a capital reserve. Okay, clear? Yeah. All right. So then I think we can just close our discussion now. Okay. But please remember in the next session, we are going to continue on this briefly and we'll start with the consolidation also. That is AS21. Because we are going to continue on this. So that's why it's great. If you can just make sure that some of these things that we have discussed, you revise. And anyways, all of these concepts that we have discussed in case of amalgamation, to a great extent, you will find we'll apply that in AS21. Okay, so there will be a good linkage we'll use. So there again, your revision is going to be extremely important. So please make sure you revise that. Okay, yeah. So thanks so much for your time and for your wonderful participation once again. Thanks. Manish, we can close this. Yes.